Dividend investing is a total return type of investment. You can get a return based on the underlying share price increasing, and you also get dividend income. In today's video, we're going to take a look at a $1 million portfolio and see how much dividend income you could receive in year one. Also, we're going to show you how I would build a $1 million portfolio if I was starting from scratch right now. Again, when it comes to dividend investing, it's not about the year one dividend income. It's about the year 5 or 10 plus. Dividend investing is a process, and the power of compounding is very real. There are various types of dividend stocks out there. There's low yield all the way up to high yield dividend stocks. And although the high yield might be enticing, I always tell my students who go through my 6-week investing accelerator course to never invest based on yield alone. After all, a dividend yield has an inverse relationship to the stock price. If you see a stock price tumble, you're going to see a dividend yield skyrocket. And if you're sitting there in a position, it might look like an enticing dividend yield, but if you have a company that has underlying issues going on, it's likely a dividend that could be cut in the near future. All right, so before we take a look at a $1 million portfolio and how I would construct that $1 million portfolio here in year one, and we're also going to take a look at how that dividend income can increase over the years, do me a huge favor though. Click that like button down below, subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could sign up to receive their 10 best stocks to buy right now. All right, let's jump back into today's video, one that I think is going to be rather exciting. We're going to try and do two different things here. We're going to show you how much dividend income you could receive from a $1 million portfolio, while also showing you how I would construct this $1 million portfolio if I was starting from scratch today. There's a number of different ways that you could go about constructing this portfolio. You could focus on yield, which is going to give you higher income from the start, but probably lower growth. Or you could go more towards the dividend growth side. That's the stocks that I like, companies that regularly increase their dividend, and they do it at a strong clip. As such, here's a look at the spreadsheet that we'll fill out to build our $1 million portfolio, with the header showing you the ticker symbol, the company or ETF that we're looking at, the price per share, the amount we will invest in that particular dividend stock or ETF, how many shares that investment will be able to buy us, the latest dividend information and yield, and how much income we're going to generate from that investment. And lastly, we're going to take a look at the 5-year dividend growth rate for that particular investment. At the bottom, we'll see totals on how much we have invested and how much total dividend income we'll be receiving in year one. Again, this is year one, and dividend investing is less about year one and more about years 5 plus. All right, so let's see how we would build this portfolio. First thing I'm going to do is we're going to invest $250,000 into my favorite ETF that's out there, a dividend ETF known as SCHD, or also known as the Schwab US Dividend Equity ETF, a well-rounded dividend-focused ETF. And for those of you that have been through my 6-week investing accelerator course, then you know the importance that I put on building a strong foundation, which usually starts with either an ETF or an index fund. So it should be no surprise that you see an ETF at the top of this portfolio. So when looking at SCHD, we're going to invest that $215,000, which will buy us 2,741 shares at today's price. The ETF currently yields a dividend of 3.4%, meaning we will generate year one income of $7,292. And the ETF has a 5-year dividend growth rate of 13.1%. It's a great mix of a little bit higher yield as well as strong dividend growth. Looking here, you could see the holdings breakdown. Again, a very well-rounded ETF. And down below, you can see the top 10 holdings, led by Broadcom, AbbVie, Merck, and Home Depot. In total, the ETF has about 104 total positions, with the top 10 accounting for roughly 42%. So now moving to the second position within our portfolio, which also happens to be an ETF, except this ETF is more focused on higher dividend yields. This is HDV, or the iShares High Dividend ETF. For this one, we're going to invest $180,000, which at today's price will buy us roughly 1,681 shares. The ETF yields 3.6%, so a little bit higher than SCHD, and the income we will generate is $6,539. In terms of the 5-year dividend growth rate, we're getting 4.7%. So although this ETF focuses on higher dividend yields, it's going to focus less on dividend growth, which is why you see SCHD had about a 13% 5-year dividend growth rate, where HDV has only about 5% or less. Looking here at HDV, you could see the holdings breakdown, which the top sectors are healthcare and energy. Moving further down, we could see the top 10 holdings led by Exxon, AbbVie, Johnson & Johnson, and Verizon Communications. In total, you have much less total positions, with only 82 positions, the top 10 accounting for 52%. So now moving to the third position, which also happens to be an ETF, but this is going to be the final ETF on our portfolio here, and that's going to be DGRO. So SCHD, well-rounded. HDV, high dividend yield. This one, DGRO, is more focused on companies with faster and consistent dividend growth. So this is the iShares Dividend Growth ETF, and we're going to invest $150,000 into this ETF, which will buy us 2644, so 2,644 shares. The ETF yields about 2.3%, so much lower than the first two we looked at, and we will generate $3,490 of income. But when looking at the 5-year dividend growth rate, you expect to see a higher 5-year dividend growth rate than that of HDV. And do? We see a dividend growth rate of 10.2%. Looking here for DGRO, the top sectors include technology, financials, and healthcare. And when we scroll down, we can see the top 10 holdings led by Broadcom, JP Morgan, Microsoft, and AbbVie. In total, this is going to be the largest ETF in terms of total positions, with 424 positions, the top 10 accounting for 27%. So that rounds out the foundation of our portfolio. We have 3 ETFs, SCHD, HDV, and DGRO. Now we're going to move on to individual stocks. And if you're a hands-off investor, you don't even need to get into individual stocks. Individual stocks are going to add a little bit higher risk, but also higher reward potential as well. So when it comes to AbbVie, we're going to invest $100,000, which is going to buy us 559 shares at today's prices. The company yields about 3.5% in terms of a dividend yield, which will earn us $3,467 in dividend income. Looking here, you could see the dividend growth for AbbVie. Over the past 3 years, it's been about 7.4%. Over the past 5 years, we're looking at about 8.7% in terms of dividend growth. All right, so now we went from one of my longest held positions, and we're going to go to one of my favorite REITs, or actually my favorite and my largest REIT holding within my personal portfolio, and that is Vici Properties, stock ticker VICI. And for Vici Properties, we're going to invest another $100,000, which will buy us 3,434 shares, a much higher yield when it comes to REITs. Vici offers a yield of 5.7%, meaning we will have income of $5,701. Looking here, we could see the dividend growth for Vici. Over the past 3 years, roughly 8.7%, and over the past 5 years, we're sitting right at 10%. So very rare to see a high yield and solid dividend growth. It makes Vici very unique. And now we're going to go from one REIT to probably the most famous REIT on the market, and that is Realty Income, stock ticker O. And for Realty Income, we are going to invest $90,000. And that will buy us 1,701 shares of stock O. And they pay a dividend of $3.08, which yields 5.8%, meaning we will have annual dividend income in year one of $5,239. So in terms of dividend growth for Realty Income, looking at the dividend growth rate here, you could see that over the past 3 years, a dividend growth rate of 4.2%. Over the past 5 years, closer to 3.6%. So much higher yield, but more typical in terms of lacking dividend growth. Although they are consistent in increasing the dividend, they just don't increase it all that fast. All right, now let's infuse some more high yield. And we're going to go with Verizon Communications, stock ticker VZ. And for Verizon, we're going to just invest $85,000, which will buy us 2,151 shares. The company yields 6.7%, so that's going to be the highest dividend yield on today's list, which will generate us $5,723 of dividend income. So when looking at dividend growth, very similar to that of realty income, usually a high dividend yield usually coincides with very little dividend growth. And it's no different when it comes to Verizon, as the 3 and 5 year dividend growth rate are sitting right around 2%. All right, we got 2 positions left to fill within this portfolio, and we're going to move to one of Warren Buffett's favorite products and favorite dividend stocks to invest in, and that is the Coca-Cola Company, stock ticker KO. We are going to invest in our portfolio $50,000 into the Coca-Cola Company, which will buy us 840 shares at today's price. The company yields a dividend of 3.26%, meaning we will generate dividend income on year 1 of $1,630. Turning over here to look at the dividend growth when it comes to Coca-Cola. Over the past 3 years, about 3.9%, and over the past 5 years, sitting right around 3.4%. So a much more mature company usually coincides with slower dividend growth. And the final position to fill out today's portfolio to give us $1 million invested is going to be also one of my favorites. One that's been struggling of late, but one that has a great track record in terms of dividend growth. And that is Starbucks Corporation, stock ticker SBUX. For Starbucks, we're going to invest our final $30,000, which will buy us 329 shares. The dividend yield currently sits at 2.5%, which will generate us income of $751 on year 1. And when we look at the dividend growth, we could see that over the past 3 years, they have a dividend growth rate of about 8.6%, a 5-year dividend growth rate of 9.8%. Looking even further out, though, you can see what I'm talking about in terms of being a very strong dividend growth company with a 16.7% 10-year CAGR in terms of dividend growth. So that there fills out our portfolio in terms of investing $1 million. You could see here that we will generate nearly $40,000 in annual dividend income on year 1, which puts us right at a dividend yield in terms of our portfolio at 4%. So if we were to add up all of those 5-year dividend growth rates right now, not even looking at weighted average, we would have a portfolio 5-year dividend growth rate of about 7.5%. However, if we were to do a weighted average, we would be north of 8%. So knowing this information, a portfolio yield of 4%, a 5-year portfolio dividend growth rate north of 8%, let's utilize that information and head over to my dividend calculator. Looking here, you can see my compounding calculator. This has our starting investment of $1 million. We're not going to add any fresh new money. We're just starting with $1 million and letting it ride here. Of course, if you add more money on a monthly basis or a yearly basis, it's going to make this process move even faster. We're going to plug in an average annual share growth. So this takes aside the dividend, the actual dividend. This is just strictly the share price appreciation. So we'll just look at the S&P 500 typically trades between 8 and 10% on average. We're going to get conservative and take the low end of the range. Again, we saw that we had a dividend portfolio yield of about 4% and a 5-year average dividend growth rate of about 8% if we were to take it on a weighted average. So we're going to plug all of that information in, and you can see what happens here. We would start off roughly about $40,000 in dividend income, which is where we calculated just a second ago. But if we start compounding this, we take that $40,000 and reinvest it, again, the same weighting that we have here, that next year, we're going to have dividend growth or dividend income of about $44,800. Fly up all the way to year 5, we're talking about dividend income of nearly $63,000. Go to year 10, we have dividend income that has surpassed $100,000. Now, there's a lot of calculations and estimates that go into this, but you can understand the true power of compounding. Take your dividends, reinvest those. Now you're investing in companies that increase their dividend and you have a higher share count. You could see how that dividend income climbs higher and higher. All right, so now we've looked at how much dividend income we can generate from $1 million portfolio. We also took a look at how I would build a portfolio, starting with the foundation with key ETFs, SCHD, HDV, as well as DGRO to round out that foundation, and then trickling in individual stocks, dividend-paying stocks that regularly increase their dividend. Down in the comments section below, let me know how you would build out your $1 million portfolio. And if you haven't done so yet, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.